Hey everybody, Glenn Tompkins here. So every time you look at the computer, you open up a headline story, anything dealing with stocks, the two headliner stocks are GME and AMC. They're everywhere. And people are saying that this could be the trades of a lifetime, and they actually could. So we're going to have just a little bit of a conversation today about these two stocks. And if you're ready to have that conversation, you sit right there. If you're brand new to the site, please hit the subscribe button, hit the bell icon so that you'll be alerted when new content comes out. And most of all, please hit the like button because these likes help the algorithm send or spread these videos out all over the place. And if you think the content that we're giving is good, you want more people to see that. I'm going to get right into everything real quick. So we're going to talk about, again, AMC and GME. New news came out last night. Meme stocks stumble after GME as GameStop, man, told you it's early morning, as GameStop discloses SEC probe into frenzy. Now, this is interesting because this is what the retail investors have been fighting for the companies, the brokers that are out there super shorting shares or creating synthetic shares, putting more shares out there than are really available. And if that's the case, that's some illegal activity. Now the SEC is getting on board. And as we scroll down a little bit, it looks like Gary Gensler might be doing more than just watching meme stocks. All right. GameStop disclosed late Wednesday that the U.S. Securities and Exchange Commission has asked for its cooperation in investigation into the unprecedented volatility its stock has seen in the last recent months. And that's exactly what's been going on. As the stock starts to go up, it seems like it just keeps getting pushed down. That happens on both GME and the AMC stocks. And as I get more into this presentation, both of these companies are trying to do things to make themselves seem more viable as a company. So they're trying to do the right things. Why do hedge funds short a stock? Because they feel that the company is no good. And that's what they did for both GME and AMC. And evidently, they're fighting back and saying, no, we are viable companies and we don't need to be shorted and put out of business. On May 26, we received a request from the staff of SEC for voluntary production of documents and information concerning SEC investigation into the trading activity in our securities and securities of other companies. GameStop disclosed its 10Q quarterly evening earnings filing. So as we look down here, talking about making the companies better, despite stronger sales, all right, in the fiscal year, a smaller 68.8 million loss in GameStop, announcing a long anticipated naming of a new chief executive officer and chief financial officer, its stock fell by much as 13% in after hours trading. But it wasn't just GME. It was AMC down. It was BlackBerry down. It was COS. It was Nokia. All of these stocks are part of the Reddit movement of the retail investor going after the hedge funds for overshorting on stock. The newly appointed Wall Street top cop on Monday signaled that meme stocks were on his radar when the agency stated that the SEC staff continues to monitor the market in light of ongoing volatility in certain stocks to determine if there have been any disruptions in the market, manipulative trading, and other misconduct. So that's some serious stuff. The SEC is now on board. The SEC is getting in there. Several posts on Reddit boards even question the SEC investigation might be concentrated on naked shorting of meme stock shares, which might mean more trouble for hedge funds and market makers. Others responded with skepticism. So this is big news that affected all of the stocks that are on the Reddit move. So I wanted to talk a little bit more about what the companies are doing to see themselves as viable companies. So Most recent GameStop earnings, sales rise 25% as retailer chases an e-commerce growth. They are pivoting, again, trying to make themselves more viable. Says it may sell 5 million shares. Why do they do that? So they can raise capital so they can do other things for the company. GameStop shares rose 25%. The video game retailer said it tapped Amazon executive Matt Furlong as a new CEO. Ooh. It declined to provide the forecast for the year, but said sales momentum has continued into the second quarter. So as I read down a little bit more, what happened in the earnings, loss per share, 45 cents adjusted versus 84 cents expected, and the revenue was higher than what was expected. In the quarter, GameStop recorded its net loss narrowed to $66.8 million. And you know what else, as I saw in here as well, is that they don't have any debt. I think Patrick has done a great job on the GME side talking about GME, but they don't have any debt right now, and they're raising money so that they can do better for the company. Gary Cohen is there. So it's a lot of positive things going on behind the GME side. So now I wanted to flip over to the AMC side. Their last earnings was on May 5th of 2021, about a month ago. The last earnings they had was they were negative 142 on earnings per share. But as I look at this, the next one that should be coming up sometime in August, it's going to be even less bad. And then going into quarter 3, it's going to be less bad. Going into quarter 4, it's going to be even less bad. So they're doing everything that they can do to grow their business as well. And what are they doing? They're also putting out the opportunity to sell more shares or put more shares out there to raise capital. And along with that, I've seen a lot of rumblings about them picking up other movie theaters as well. So both of these companies are doing what they can to grow their business to make sure that people don't overshort them because they are viable. So I'm going to do this as well. Another news article came out yesterday. Actually, yeah, that was yesterday. I've got to keep my days together here. Last night, AMC Entertainment Holdings announces the shareholder count. So right now, as previously disclosed, there was about 500 million outstanding shares on June 2nd of 2021. The record date of the shareholder meeting was scheduled for July 29th. So they're going to have their shareholder meeting. And right now, they say there's approximately 4.1 million individual shareholders eligible to vote. Interesting. More than 80% of AMC shares are held by a broad base of retail investors, averaging around 120 shares. That's freaking huge. And GME is doing the same thing to show how many people own their shares. And both of them are at a high level of retail investors owning their shares. So now that takes me back to another question. As we talk about this, we talk about AMC and GME hitting the 1,000, 2,000, 100,000 range in stock. As I sit back and look at that, theoretically, I think on paper, that looks great. But we are humans. We are, listen, I made some money, and just for transparency, I own both stocks. I own both GME and I own AMC. I've made a good chunk of change on AMC, and I sold some of my shares. Why? Because I made a good piece of money. As an investor, what are you supposed to do? You invest in the market to make money. I still am in the game with exactly 250 shares. All right. So again, for the sense of transparency on GME, I own 50 shares. All right. And I think that AMC, in my opinion, has more upside because of the price point on the stock as compared to the $300 or more price point on GME. That's just my opinion. As the retail investor, and even on AMC, I'm wondering what the average amount of shares held are on GME, as we say here that the average investor here in AMC owns 120 shares. I wonder what that number would be on GME. And if somebody can answer that for me in the chat, do so in the comments. Let me know. But I still think that the number of people who own the shares on both companies are extremely high. That leads me to another question. All right. That leads me to another question. What if the stock really gets up that high? All right. How to tell if AMC, GMStop can make the Russell 1000? As these companies grow, they're making themselves more viable. They're growing their market cap. As they grow their market cap, they can choose or they can leave. How about that? AMC and GameStop, and this was a couple of days ago, have left the Russell 2000 in the dust this year. They're looking to be listed on the Russell 1000. Now, as I go through here, let's say it says an existing Russell 2000 index member would have to have total market cap exceeding 7.3 billion in order to move to the Russell 1000. Why is that important? Because a lot of investment funds invest off of certain indexes. If these two stocks can leave from the Russell 2000 and go to the Russell 1000, which is more of an elite group of Russell stocks, this opens up the doors for other money managers to go on board with now GME and AMC. They weren't able to because maybe they don't trade the Russell 2000s in their portfolio, but they do the Russell 1000. This could be huge for both of these stocks to drive the stock's price higher. All right, going by that, the market cap by 4.2 billion on May 7th would fall short on AMC, while GameStop does hit that number of 11.97 billion in market cap. All right, but now, as of Friday's close, after big rallies in the last month, GameStop had a market capitalization of 18.4 billion, and AMC moved up to 24 billion. Holy crap, that's the huge move from May 7th to just last Friday. So getting these stocks onto the Russell 1000 could be huge. Now, I still want to go back to my question. What happens if either one of these stocks or both of these stocks go up to the values that a lot of people anticipate? Then comes the DTCC, all right? I did looked to do research. The DTCC is worth, I think, $63 trillion. Interesting. Because now if all of these hedge funds that are out there that could be floating all of these shares like Citadel, what'll happen when they have to buy these stocks back at really high prices that the retail investor dictates? They're going to fall short, and then the DTCC is going to have to bail them out, or they're going to go bankrupt, and the DTCC still needs to back them up. So I still think that if these numbers that are expected by the retail investors hit, a lot of companies are going to go out of business, but these shares will be covered by the DTCC. I want somebody in the comments to tell me if I'm on board with that number. $63 trillion the DTCC is worth? That's a lot of money. Somebody let me know. I did as much research as I could on that, and that was the number that I came up with. All right, so one last thing. Let's go into the software and let's go take a look at these stocks. Hopefully I can look at them pre-market, use extended hours. Let's stream it. I want to see before I end this video what's going on with these stocks now. Let's stream them. Look at that. Even with all of the news that I just gave you, our pre-market starts at 8 o'clock in the morning. So right now you can see it's after 8 o'clock. Both of these stocks are going down. GME already said that they did good in sales. And so one last thing. That's just right now pre-market. Let's do one last thing. All right. There's a lot of people who are out there that are saying that they're going to be the diamond hands. I'm not a diamond hand. I'm not an ape. I'm not a paper hands. I'm trying to be a realist. And as we have this conversation, theoretically, I think that these stocks both are black swan events, that these could be once in a lifetime trades. Absolutely. And, you know, if you go up to that number of $100,000 per share, holy smokes, all I can do is sit back and go, oh my gosh, because that's just crazy. Makes me a little leery though. What are we in a new state or a new trend of investing where we can, as retail investors, just pack up now and just say, you're overshorting this company, we're coming after you, and just do that over and over? You know, I'm still old school. And whether you call me a boomer or whatever you want to call me, if this is the way that we're changing to go along with, well, it's going to be one of two things. Either you're going to get off the bus or you're going to keep on riding. And for me, as long as I can make money in the market, I'm going to keep on riding. So with that, folks, this video is over. Until the next time, see ya.